what is market volatility and why it is important for you. Okay, so this topic is what I'm going to explain in this video. So stay tuned till the end of this video and you will understand how it is important, why it is important for you, and how you can check this out. Okay, so let me explain this through my mind map. Okay, so this is what I'm going to cover. What is volatility, its effect on you, how to take advantage, and how to check volatility. Alright, so let me explain one by one. So first of all, volatility is nothing but it just measures the market sentiment. So when there are huge ups and downs into the market in a short span of time, then we say market is very volatile. But when it is relatively stable, then we say it is not volatile, right? So it basically is a result of the fear in the market, because when people are fearful, then there are huge moves into the market, or when people are having high expectations, right, then also there are huge moves, right? So that is what is meant by volatility. Now we will go and see what is its effect on you, why you should be taking care of volatility, why it is important for you. All right, so it is important for you because if the volatility is high and you are doing an option trade, so then the premiums are also very high. So if you are entering into a certain contract where you are receiving premium, then you will get more premiums. However, if you are entering into an option contract where you have to give premiums, okay, you are giving premiums, then again you have to give more premium. So depending on your capital allocation, depending on the fund that you have allocated for options, you can go ahead with what strategy you want, depending on the volatility of the market, right? So if you have less capital and you are entering into a strategy where you need to give the money as a premium, where you have to give the premium in option, then probably you will wait for the volatility to come down. Because if you enter in a high volatile market, then you will have to pay a lot of premium. But if you want to collect premiums, then a high volatile market is good for you, because then you will collect a lot more premium, correct? So depending on what you want, you have to look at volatility that way. And a volatile market is basically a high risk market. In high risk means that you can have high profit as well as high losses. Okay, so if you are not willing to take more risk, then probably you should stay away from a volatile market. It's basically a roller coaster ride when it's very volatile, right? So you should keep this thing in your mind that you can have very much high profit as well as high losses as well. Now we'll go and see the third point, how you can take advantage of this volatility. Okay, what you can do to tame this volatility, to reap rewards from this. So I'll tell you two indexes that you can trade. Okay, two indexes. One is VIX, and VIX is basically for the international market, and the another is India VIX, which is for the India market. Let me show you how do they look like. So this is VIX. If I type VIX, I get to see this, right? And it is basically a fear index. VIX is also referred to as the fear index of the market. So this particular VIX is basically a fear index for the S&P 500 companies into the US. Okay, so if the value is, right now it is 26.16. If the value is high, let's say 70 or 80, it denotes very high fear in the market, which essentially means there is very high volatility. Okay, so let's check out the fear index from the past few days. So you see it was higher initially, now it has come down and again it is going up. So basically it shows that the market is getting more volatile. Now if you want to check out the India VIX, again you just have to type India VIX here, and you can see the stock symbol is India VIX, and again you can see it is also an index of the emotions or the fears into the Indian market. Okay, so again you can see it went down initially and now again it is going up. So basically it shows that there is more volatility in the market right now. So how you can take advantage of this volatility? You can take advantage of this volatility by entering into a particular trade, right? So for example, right now the volatility has increased, okay? And you know that the volatility is bound to come down because fears don't last for long, right? Market is not always volatile. It is bound to come down, right? So when it is at the all-time high, or when you think that the time has come for the VIX to come down, then you would enter into a certain trade where the downward movement of VIX will give you profits. I'm talking about the options here. Okay, so you will enter into a strategy where you will place bet on the VIX coming down, and when it comes down in couple of months or years, then you will make profit. Okay, the opposite case, when the VIX is already all-time low and you suspect that there is going to be some change into the market which will induce fear into the market, into the investors, and that will cause VIX to go up. So in that case also you can enter into a particular option trade where you will place bet on VIX going up. So when it goes up, you will make profit, right? It's very simple. So you just have to tap the volatility index, tap into the sentiments of the market and reap rewards. If you have done the trading the right way, right? If you know the direction. So that was the two way I wanted to show you how you can tap this particular volatility index and profit from it. And now I'm going to show you how to check volatility. So I've explained right now why it is important, what it is, and how you can take advantage. But how to know what is the volatility right now? So you saw one way that you can check volatility using VIX and India VIX. But apart from that, if you want to check volatility of a certain stock, because VIX and India VIX is basically it's basically a indication of a bunch of the companies present in the market. So for example, VIX is basically a index of S&P 500 companies. Similarly, India VIX is a index of some of the companies present into the Nifty, into the BSE, NSE, okay? But what if you want to check volatility of a certain stock, just one company, right? So that is what I'm going to show you in Interactive Brokers, because that is the broker I use. So this is my Interactive Brokers account, and now you see I have typed BA. BA is basically the symbol of Boeing. So you can see that there is this symbol here, IV. Can you see this? Where my mouse is? IV. Yeah, here, right on the side, right on the right side, 98%, which basically indicates a high volatility. And if you change the dates, so now on June 12, the volatility is even higher. IV is basically implied volatility, 102.7. On June 9, it has decreased a bit and it is 98%. On June 26, it has again decreased a bit and it is 87.4%. Alright. So depending on what date you are entering the contract, the volatility might differ. The IV might differ. Okay. So friends, this is what I wanted to share in this video. I hope you like the learnings in this. What is volatility? You understand that and how you can take advantage of this volatility. Alright. So that is all, and see you soon in the future. Stay tuned to my videos. I'll be sharing few more important learnings to you in future. And till then, stay connected. Take care. Bye-bye.